Good morning, everyone. My name is Sue Naramore. I am a specialist with the Department of Housing and Community Development in the Disaster Recovery Unit. We are presenting Section 3 program implementation rules, final rule and program implementation for subrecipients today. We have the great fortune to have this presentation, this training presented by our partners at Capital Access, Grant Johnson and Catherine Mayrose. I'll have them introduce themselves in a minute. Just a couple of housekeeping items, letting everyone know that we are recording this. I do have closed captioning on because our intention is to go ahead and post this on our website as a webinar once we are complete. And we will be sending out the slides and posting the slides after the presentation is complete. We have the Q&A is live. If you have any questions, please just send us questions and answers. We'll do our best to answer the questions in real time, but we'll also offer Grant and Catherine time to answer those questions verbally as we go through the program. This is a 2-day training. Today is talking strictly about the final rule and how it applies. Tomorrow's training will talk about exactly what steps and forms and full implementation conversation on how to meet safe harbor and be compliant with the new final rule in your programs. So with that, I'll turn it over to Grant and Catherine and let them introduce themselves and take it from here. Just tell me when you want me to advance slides, Grant and Catherine.
Thank you.
Sure. You can go ahead and advance. Grant, did you want to start or did you want me to start?
I'm happy to. Hello, everyone. Okay. You may have had this presentation before and it's a refresher, or you may be new to this work. So pleasure to meet you. I'm Grant Johnson. I'm a HUD technical assistance provider to the state of California for their CDBG-DR and mitigation programs. So we are assigned by HUD to provide regulatory expertise and guidance to the state in the implementation of their programs. And so it's a pleasure to work with both the state and the subrecipients today. This is an important topic that you'll soon learn has changed, and that a lot of your developer and contractor community may not be aware of how it has changed. So looking forward to a lively discussion.
Likewise. Hi, everyone. I'm Catherine Mayrose. I work with Grant for Capital Access, and I'm a consultant in the disaster recovery and mitigation world. Prior to coming here, I was actually a grantee like yourselves. So I was the CDBG manager for St. Louis County here in Missouri, where I am. And as part of that role, I developed the Section 3 program for St. Louis County and launched it. And so very excited to be here with you today. Next slide. So a quick look at our agenda for today. As Sue mentioned, this is a 2-part presentation. So for today, we're going to focus on getting a really firm foundation of what the Section 3 final rule entails, and then folding that information into an overview of what Section 3 looks like now that the final rule has taken effect. Then we're going to go into some considerations for designing your Section 3 program. And then tomorrow we will take all of those concepts and discuss how to implement them. So putting your plan into action and then documenting compliance. And then we actually have a couple of sample fictional project scenarios that we're going to walk through so everybody can visualize how Section 3 would be operationalized on actual projects. Next slide. So just a quick note, the content in this presentation is recommendations for you to consider in partnership with the state. So as you're designing your Section 3 program, we do recommend that you keep in close contact with the state and your HUD representative as necessary, but primarily, working with the state in order to design your program. Next slide. So quick note, another quick note. So there are actually a couple of different sets of requirements for Section 3 in the final rule, the new regulations. They do separate it into housing and community development projects and public housing authority projects. So our focus today is going to be on the housing and community development projects, which does include CDBG, DR, disaster recovery, and mitigation, as well as if you are an UGLUG in the state CDBG program. So we're not discussing the public housing requirements today. As we've mentioned, the final rule did modify the Section 3 requirements. If you've been working in the CDBG world for a while and you were familiar with the Section 3 old rule, then we just want to point out that anywhere where something changed, we flagged it by putting it in purple italic text. If you are completely new to this program and have no experience with Section 3, then you can disregard the purple italic text because it will all be new for you. And then finally, anywhere where you see an arrow bullet point, that means that's a recommendation that we're putting forth as a way to design your program, but it's not something that's necessarily in the regulations or prescribed by HUD. Next slide. So the Section 3 final rule, let's take a closer look at that and what it entails. First off, what is Section 3? Well, it's a provision of the Housing and Urban Development Act of 1968. So it is a piece of legislation. So really what we're saying is that we're focused on Section 3 of the Housing and Urban Development Act of 1968. The purpose of Section 3 is to help bring the economic opportunities that are generated by HUD assistance to low income and very low income people who are the beneficiaries of that HUD assistance. So it's kind of intended to be a dual benefit. So, excuse me, I'm a little hoarse today. So not only are they benefiting from the project itself, whether it's housing or public facilities or infrastructure, but then also as a result of that assistance, if there are construction jobs being generated, then the intent of the legislation is to give those beneficiaries of the assistance the opportunity to also benefit by potentially getting a job from that assistance as well. Next slide. So why did Section 3 change? As we mentioned, it was the Section 3 interim rule, otherwise, informally known as the old Section 3 rule. And then in 2020, the final rule was implemented, and the intentions for making these changes, as HUD has stated, is that they wanted to really streamline the way that compliance was tracked and reported on Section 3 projects. Also, they wanted to align the regulations with standard business practices, which primarily what they had in mind was Davis-Bacon or federal labor requirements. And then also they really wanted to take a look at how effective Section 3 was at accomplishing its stated goal of providing economic opportunities for low and very low income folks. So they also just really wanted to try to make it more impactful and increase the positive outcomes for Section 3. Next slide. So before we get into it, just want to call your attention to the fact that because the final rule came out in 2020, HUD has put out a bunch of new resources to try to support grantees as they're adapting to the final rule. So in the next 2 slides, we just have all of those or most of those resources linked. Any that aren't directly linked, should be found on that first link, which is the Section 3 final rule. landing page on the HUD exchange. So they are very helpful. The one that I find most straightforward and find usually the answers that I would be looking for is those Section 3 FAQs, the third one down. But they are all really helpful. And you can go on to the next slide, and there's there you'll see some more. So just this is here for your reference, and it'll also be at the end of our presentation as well. Next slide.
For those, if I can interrupt, for those that are not familiar with the HUD Exchange website, I strongly encourage that you investigate it. It has a wealth of information, materials, HUD-supported documents, templates, and guidance. And it goes a lot deeper than some of the basic CDBG, home, CDBG DR, and MIT information that you might have received directly from the HUD site. There is different information such as direct guidance from HUD and other materials on the HUD website. So if you need guidance and information, you want to do some research for yourself first, I strongly encourage you all to look at both sites, as there will be complementary information, but the direct HUD guidance is not always posted on the HUD Exchange site.
The other thing that's really great about the HUD Exchange is that that's where you can go to sign up for various mailing lists on different topics, including Section 3. So that then anytime there's an update, pertaining to that topic, you'll automatically get an email. So it's a really good way to stay in touch with any updates that HUD is communicating as well. So we're going to take a quick look at the timeline of Section 3. And again, if you're new to the HUD world, then this is maybe just interesting history for you. But as we said, 1968 is when the original Section 3 requirements came out. Those requirements were in place until 1994, when HUD put out the Section 3 interim rule. So again, if you've been working in the HUD world for a while, this would probably be the one that you are familiar with. But then in 2019, HUD announced that they were going to be making some changes to Section 3. So they issued the Section 3 proposed rule, and it had a public comment period of just about a year and a half. They did take public comments. They actually did make some changes in response to the public comments. And then on November 30th, 2020, the Section 3 final rule was published. For about 7 or 8 months, the final rule was out there, but the reporting modules weren't fully set up. But now, since July of 2021, all of the reporting requirements and everything are live in IDIS and DRGR. Just also want to stop for a second and clarify that IDIS is the Integrated Disbursement Information System, and DRGR is Disaster Recovery Grants Reporting System. So those are two databases that HUD maintains, and so anyone that's receiving assistance for certain HUD programs for community development, those systems are how you would report your progress on activities to HUD. If you are receiving your funds through the state, you're going to have a different system, but this is just so everybody's not confused, that's what the acronyms stand for. Those are HUD databases. Next slide. So the timing of the transition to the final rule is that Section 3 requirements for the final rule apply to any new grants, commitments, contracts, or projects that were funded on or after that November 30th, 2020 date. So HUD has defined that as that it's applicable if a recipient of HUD funds has executed a legally binding written agreement after that date. The examples that HUD has put out that they consider to be a legally binding written agreement is either an executed subrecipient agreement, an executed homeowner rehab loan or grant agreement, or any subsequent contracts procured under that agreement, or an agreement or contract with a developer or for-profit for a multifamily rehab project. So those are just examples in case you're like, how do we define what was the project funded when we decided that we'd give them money, or is it funded when we had our first draw. And so this is the benchmark. It's once you've executed a legally binding agreement.
So if we just take a moment there, Catherine, Sue, correct me if I'm wrong, but I think your whole audience here would all be subject to the Section 3 final rule. I don't think we're working with anybody that predates any of these.
Agreed, although some of the contracts and agreements that are in place may predate, but most everyone here will have a current contract under the new rule.
Got it. And again, if they're doing or executing projects and they're a pass-through type of entity as a subrecipient, it's still going to be triggered at that point.
Yes.
Okay, so we can go on to the next slide. So if you did have any existing contracts, maybe you have contracts that were executed after that November 30th date, but for whatever reason, maybe the final rule just wasn't on your radar, or maybe Section 3 wasn't on your radar at all at that point. And so now you have, potential issues with compliance on those existing contracts. Our advice would be you can't really retroactively force a contractor to comply with Section 3. Certainly not if the project is completed now, but also if they weren't initially procured with that understanding upfront that they would have to comply with Section 3, then you really can't go back and force them to. So our advice, if you do have any open projects where Section 3 new rule would apply, maybe take an inventory of all of those projects and contact the contractors if the project is active, and discuss what they might be able to do, kind of voluntarily at this point, and definitely document those conversations, because those are, considered making the effort to comply. But bottom line, if they're not willing or able to make those efforts, just make sure that they're completely clear that going forward, they are going to have to comply with the Section 3 final rule. And then focus, your remaining energy on building a Section 3 program that is compliant with the final rule going forward.
I'll just add to that you'll still need to report in the systems, and we will be getting into some of these details, but just to clear things up front, how and when Section 3 is triggered is different than what you may have been used to with your earlier CDBG entitlement or home programs. So any of you that are already working with HUD funds, either as a subrecipient from past awards or as direct entitlement grantees, meaning you're receiving your funds directly from HUD, all of this still applies. So it's still relevant for you as home and CDBG managers. What's triggering it is the cost of the project, and we'll outline all of that for you in a moment. But I just want to demystify that this is FYI information, but I don't think a lot of this is going to apply to many of you. I think Sue and the state have been in touch with most of the subrecipients and identified that there are no projects right now, at least with the DR and mitigation funds, that kind of were grandfathered in, and therefore this won't apply.
Thank you. Next slide. So we're going to just take a look at an overview of the main highlights of the final rule and what changed. So the old requirements to the new requirements. The first thing that is maybe not the most important, but it's important to help make sense of everything that comes after it, is there used to be a term in the old Section 3 that was a Section 3 resident, and that was an official designation. That designation has changed, so the term is now Section 3 worker, and they have added a preference for a specific type of Section 3 worker called a targeted Section 3 worker. And we will get into what that means in just a moment. There used to be a new hire benchmark under the old Section 3 rule. So on a project where Section 3 was applicable, 30% of any new hires had to be Section 3 residents, meaning that they met specific criteria. That requirement is no longer the case. So now there are two new numeric requirements instead. They are, instead of tracking new hires, you're going to be tracking project hours. Total project hours worked by Section 3 workers is 25%, and then 5% of the total hours worked on the project have to be by targeted Section 3 workers. The next change is that, so there are Section 3 workers and there are Section 3 businesses. And again, both have to meet specific criteria in order to qualify as one of those designations. So that criteria has changed slightly for businesses. It used to be that a business could be certified as a Section 3 business if they demonstrated a commitment to subcontract 25% of their work to other Section 3 firms. So they would be kind of piggybacking off of those firms' Section 3 certification. That requirement is no longer in, or that criteria is no longer in place. Now the criteria in order for a business to be Section 3 is that either it needs to be 51% owned and controlled by a resident of public housing or Section 8 housing, or 51% owned and controlled by a low or very low income resident, or 75% of the hours worked by those employees of that business over the past 3 months were by workers who qualify as Section 3 workers. I just want to point out really quick that in order to be a low or very low income resident, they do have to be below 80% area median income. So you may be used to seeing at or below 80% language, but this is actually going to be below 80% because at 80% is where you start as moderate income. And this is not a program that serves moderate income folks. So just an important distinction compared to what you might be used to if you work in CDBG. There used to be—
Can I just add one other thing here too? While these are clarifying some definitions and refreshing them, please note that the focus has now shifted not so much from Section 3 businesses to Section 3 workers. And what that means is that in order to meet or achieve or attempt to achieve some of your Section 3 goals, the shift has been to the amount of labor hours of low-income workers with your general contractors or developers on site, and not so much as qualifying, certifying Section 3 businesses. They're allowing you to do this with Section 3 businesses, and the criteria have shifted, but the emphasis is more on tracking hours of low-income workers on the jobs that are subject to Section 3. So while this is helpful, it may confuse some of you where you think, because of the old Section 3 rules, you're still focused on finding Section 3 businesses. You're actually now focused on finding general contractors and builders or developers that can qualify and track for you the Section 3 laborers on a job, or Section 3, sorry, workers on a job, and distinguishing them between a worker and a targeted worker.
So we do have a couple of questions. One question is about how a person can own a business and be considered low income. So just to make the distinction, we are primarily going to be talking, we're primarily talking about small businesses. If one of those criteria is that you can be considered, your business can be considered a Section 3 business if you yourself are low or very low income. The main way that would be true is if your business is very small, or if you're not doing a lot of business with your business. So
or very new.
Yeah, or very new. Yes. So hopefully that provides some clarity. And then another question, what if the prime contractor states there are no new hires? Would they still need to hire Section 3 workers or subcontract to Section 3 businesses? So I'm going to suggest we pause on answering that one because we are going to be getting into that in a couple more slides as part of today's presentation. So if you can just be patient for a couple more minutes. So Then the last two highlights on this slide is also concerning the numeric benchmarks. So it used to be that 10% of all construction costs on the project had to be contracted to Section 3 firms, and 3% of non-construction costs had to be contracted to Section 3 firms. You're no longer tracking construction costs for that purpose. Again, the benchmark, the metric is now project hours worked instead of construction costs and new hires. So you're only looking at that 25% and 5% benchmarks. However, there is still a requirement that you need to try to contract with Section 3 businesses to the greatest extent feasible. That is in the regs. It's just not a benchmark anymore. It's now, measured again in terms of the workers' hours worked. Also, as far as that 3% of non-construction cost metric, that's no longer the case. One of the changes with the final rule is that professional services are no longer subject to Section 3. Professional services being roles that require specialized degrees or licensing.
So for example, if you're doing a procurement for an architectural and engineering firm, that does not trigger Section 3, even though the work they may do is going to develop or design or support a project that may trigger Section 3, and we'll talk about those thresholds in just a few slides.
Right. Next slide, please. So just a couple more changes that were made. It used to be that compliance was required on a per program and a per contract basis. And I'll go into that in just a second, but now compliance is only required on a per project basis, with a project having a very specific definition in the regs, which we'll take a look at. So it used to be that any grantee receiving at least $200,000 a year in HUD funds, the aggregate of all of their activities with those funds had to meet those numeric benchmarks. But then also any covered contract standing alone that was over 100,000 also had to meet the benchmarks by itself. I always found that really confusing personally to think about. So that it is a lot simpler now. You're only looking at each project. And if that project is receiving at least 200,000 in HUD CPD funding or 100,000 in Letter Healthy Homes funding, then that's when Section 3 applies. The other thing is that those applicability thresholds were fixed in the old rule, whereas now the 200,000 and 100,000 benchmarks are subject to being updated every 3 years. HUD's basically said, yeah, we'll take a look at them every 3 years. And if we want to update them, we'll put out a Federal Register notice announcing that.
So another plug or a good reason to go onto the HUD exchange and sign up for the mailer related to Section 3. Because it's very likely that you'll get an email notification when those 3-year marks come up.
Right. And then by the same token, the numeric benchmarks on for the new hires and construction costs were fixed. The new numeric benchmarks, which is that 25% and 5% of project hours, those also are subject to being updated every 5 years by a Federal Register notice. So again, HUD is, not promising to update them, but they've said they're going to take a look every 5 years and see if it still makes sense to have those benchmarks the way they are. There is a change in the reporting. This is probably not going to apply to most of you. It's just maybe something to keep in mind. Section 3 used to be reported in a specific dedicated database called SPEARS. Instead, now it's reported by state and entitlement HUD grantees in those IDIS and DRGR databases that I mentioned a couple minutes ago, depending on which program it is. So again, this doesn't apply to you because I'm assuming all of you are going to be reporting on Section 3 directly to the state through their own program. So it's just something to know.
But
I know,
if any of you are also entitlements, then this would also make more sense to you.
right. The implementing regulation also changed. It used to be 24 CFR Part 135. Now it's 24 CFR Part 75. The main thing to keep in mind with this is that any of your contracts or forms or agreements that reference that regulation, you would want to do a find and replace and make sure you've got that the correct regulatory reference in there. And then the last change that's a big highlight is just that Section 3 used to be completely overseen by HUD's Office of Fair Housing and Equal Opportunity. And they would be the one that monitored the Section 3 compliance. Now that's going to be done by the HUD program offices. So the HUD representatives will come and monitor state and entitlement grantees directly, but the state will be monitoring you all as far as your, if you're an UGLUG or if you're receiving TR or MIT funding.
UGLUG being Unit of General Local Government.
Right, thanks. Next slide.
We have a couple of questions, Catherine.
Yeah, I was just looking at those. How does Section 3 fit into California's requirement to award contracts to the most responsive, lowest bidder? So we are going to get into that a little bit later. So I'm going to hold off on answering that one for now. That's all right.
But the short answer is it doesn't conflict.
Right. Is a project for the total contract, regular non-entitlement CDBG for the grantee for housing rehabilitation or for each housing rehabilitation project within the standard agreement? I'm not totally sure I understand the question.
I'll take a guess at that one, Catherine.
Okay.
The answer is it's per project. So it's per house. If you're a developer developing 8 plots or 7 plots, all as one project, then Section 3 would apply if you're putting more than $200,000 into that project. If you're doing individual single family new builds or rehabs and your dollar threshold for each of those is under 200,000, then Section 3 does not apply. So it's not always per program dollar amount, it's per project. So each site and how you set it up is what matters.
Thanks. And last question right now, if the Section 3 worker was low income / Section 3 eligible upon hire and is now making an income that's above Section 3 income limits, just confirming that we can still count their hours worked for the 25 and 5% project hours requirement. I just want to be clear that we aren't required to keep them at the Section 3 income level. That's correct. You're definitely not required to keep them at that income level. What you would do is you would verify their income at a point in time that it is eligible for Section 3, if that's the qualifying criteria that you're using. And then the regs do say that you can still count their hours for up to 5 years as counting towards those 25 and 5% benchmarks. We will cover that a little bit later as well. So just some additional considerations regarding the final rule. Again, want to reiterate that professional services are no longer required to be applicable for Section 3. The regs do define professional services. It's non-construction services that require an advanced degree or professional license. Legal services, financial consulting, accounting, environmental assessment, architectural and civil engineering services. So those you don't, those Section 3 is not applicable to those. However, it's not the same as saying that all non-construction services don't apply. There are still some non-construction roles that would count, would be required to count as Section 3. And those might be, site security, job site cleanup, possibly like flag traffic control if it was a road project. Those aren't considered professional services. HUD does say there's no longer a numeric benchmark, though, for that, but that grantees are permitted to include professional services. So if you do have a firm that's professional services that happens to be Section 3, you can count their hours in the total Section 3 hours worked, and you don't have to count their hours in the total hours worked. So it's a little bit of a bump that can help you achieve your Section 3 goals as an incentive to still have you try to find professional services that are Section 3. We do have a quick question here. Follow-up question to the project question. We have an activity that is single-family minor repair where we grant $5,000 per home. What would be required under Section 3 if the contract total was over $200,000 for project admin and the grants to about 25 single-family home repairs? So that's going to go into the definition of a project, which we are going to talk about shortly, and hopefully be able to provide some clarification for you on that point. So in the meantime, if we can go ahead and move on to the next section, that would be great. So now we're going to look at an overview of Section 3, and hopefully this will answer some of these questions that are hanging out there. So the first question concerns applicability. So Section 3 is required when the following conditions are true. The project is of a certain type, namely that it involves new construction, rehab, or demolition of housing, infrastructure, or public facilities, and the project costs exceed $200,000 in either HUD CPD, either $200,000 for HUD community planning and development funds, or $100,000 for lead and healthy home funded projects, and results in new employment, training, or contracting opportunities during the course of the project. So all of those conditions have to be true in order for Section 3 to apply on a project.
So let's just take a pause there, because this is an important point that we keep getting questions about.
Yeah.
First, two thresholds to consider when saying, does Section 3 apply here? One, what's the nature of the activity? Are you doing something that's construction based? Is there construction, rehab? Demolition might not be considered construction because it's tearing something down, but it's still included in that construction sphere. And then, is it tied to a housing, infrastructure, public facility type of project? So it's basically the threshold that you want to first check is, am I doing something here in a contract that's construction related? I might have a Section 3 concern. And so, yes, you might have a professional service contract with an architect and engineer, as we mentioned, but if it's just to do design work, that's considered a professional service, even though it's related to construction. You can qualify them for Section 3 if there might be a chance of them doing so and get credit for some of their hours as a business. However, it's not a requirement. The second threshold that's really important, if you've decided that, yes, the activities I'm working on are related to construction activities. The next threshold is, am I putting more than 200,000 of CDBG-DR mitigation, or in the entitlement world, home or CDBG funds into this project? If I'm putting more than 200,000, then I of those types of sources, then I have to go another step deeper to see exactly how and where it applies. But and the same is true, they're making an exception just for those that are dealing with any lead and healthy home funding sources, just to note that the threshold's different, it's a little lower. So that is those are the two things that you have to look at. It gets a little subjective when you start looking at, as I mentioned before, how you have established a project and distinguishing projects from programs. If you are let's say you're a habitat organization and you're a subrecipient to a state or a county, and you're receiving $1 million to go do some home repair or new home builds. If you are doing all of those home repairs individually as individual homeowners, so Habitat's not the beneficiary, the homeowner is. Each of those projects, such as ones that are only doing $15,000 in critical repairs, would not trigger the Section 3 requirements because it's not the habitat that is benefiting, it is the individual project and homeowner, even though habitat is managing on behalf of the state or county multiple projects. And it could be within the umbrella of some programmatic rules. So I hope that clarifies that last question. And this is where you have to really kind of go into the weeds to really be clear about the response. If you are a developer, you are considered a quasi-beneficiary. So if you are a developer building some new homes, and let's say you're going to build 10 new homes and you're getting $300,000 to subsidize that cost, then Section 3 will be triggered. You can't just say, well, I'm only putting 5,000 on this home and 10,000 on that home and 50,000 on that home, so none of it applies. Because the developer, along with whomever those new home buyers are, will be considered the beneficiary. So that project is one development project for multiple units, but it is not several separate standalone projects. So it really matters in terms of what you're building and how.
So
hopefully
Grant,
that gives a little clarification. Yeah.
Yeah, so just to drill down just a little bit more, because so many of the people on this call are HCD subrecipients or state recipients for pass-through funds. So I wanted to make a couple of clarifications. Anybody who receives annual program funds through HCD for home or CDBG are receiving CPD funds. So that 200,000 threshold does apply. But the important piece of that also is that, so one of the main questions, Grant, is that HCD will do a contract for a housing rehab program with a local jurisdiction. Let's say it's a $500,000 contract to do some rehabs at the local level, and their max grant or loan to a homeowner is $5,000. So they're locally running a rehab program. So the question is, how does that $200,000 threshold apply? Because their standard agreement with HCD is over the $200,000 threshold, but their max loan amount to individual homeowners is under the $200,000.
Right. So just to be clear, the 200,000 in your subrecipient agreement is not necessarily the trigger for Section 3, unless the state has created policy to make it so.
You're looking at the definition of a project, though, which is defined now in the final rule. So it's going to be the site or sites with any buildings on the sites that are under common management, ownership, and financing. I think that's maybe on our next slide. But so if you were doing a single family home repair, that group of 25 single family homes there, unless they are all owned by the same person and managed by the same person, and the project is being financed as a batch, unless all three of those are true, it wouldn't be considered a project that's applicable. So the only way that single family home repair is going to qualify for Section 3 is if you are putting in more than 200,000 in HUD funds per house.
Exactly. That's what I was saying.
Perfect.
But so, it really depends on how you're setting up your subrecipient agreement and what it's for.
Okay, we can go into those details a little bit after we get into more of the rules and considerations, but hopefully that makes that clarifies what subrecipient agreements. We haven't put any extra Section 3 rules on the subrecipient agreements. So anyway, hopefully that answers the question for most of our rural jurisdictions running home repair programs with small loan or reward amounts.
Think of projects as having an address, and is the address, is the way that you're subsidizing each of those addresses a contiguous site or a separate set of projects under a program umbrella. It's another way of looking at it.
Right. And so then the last question we have, do projects already under construction need to meet the new requirements? So the answer to that, as far as HUD is concerned, would be yes. If the legally binding agreement was executed after that November 30th date, then the final rule for Section 3 would apply to those projects. So again, you know, as we kind of discussed a little while back, if you find yourself with a project that's open and you're like, oh my gosh, we haven't been enforcing the Section 3 final rule on this project, then the best thing to do is talk with the contractor and find out what efforts they might be able to take. But if you didn't procure them with the understanding that they would have to follow Section 3, then you probably can't go back and retroactively force them to comply with Section 3. So the best thing is.
But my best recommendation in those situations is that what you can do is quickly take a look at the income of the workers on the site and see if any qualify as Section 3, and have an agreement with your contractor to track and report that, because you're now going to be required, you being whomever the grantee is, to report that into DRGR, or in some cases with others, IDIS. So you still want to gather the data. You just don't have to go back and re-procure.
Right. And then just focus on what you can do now, to Grant's point, the tracking and reporting, and just move forward.
But it does not mean that you have to change your current labor pool and swap out laborers or hire workers and hire new workers in replace of ones that are currently there. It's simply if there are opportunities either with existing workers, or should an opportunity for a new worker come up, then you want to make sure that you're watching that and that you're making those efforts.
Right, thanks. So another point as far as applicability is concerned is that Section 3 does apply to the entire project, even if it's only partially funded with HUD assistance. So it's kind of in for a penny, in for a pound, same as many other regulations. Also, HCD and its UGLUGs, units of general local government or subrecipients, need to ensure that contractors, subcontractors, and developers are complying with Section 3 if the project is applicable. So you need to be watching not only contractors, but also subcontractors and developers as well.
And let me just make a plug there. This is what Catherine and I, who are doing a lot of this work for many grantees across the country, keep finding, which is, as you all begin to understand the new Section 3 rule, you'll get a lot of developers or builders telling you that they already understand Section 3 and that they're going to advocate that you're grandfathered in or what have you. And what we're finding is that the building community, the actual general contracting and construction community, has not absorbed this new information. And so while they may be confident in their understanding of Section 3, it's an old understanding. And so you have to really sit down and be clear, and you can use this presentation together to identify their level of understanding, because a lot gets missed in communication. And so what we're finding is a lot of subrecipients and grantees coming back and saying, but our developer says that it doesn't apply because of XYZ, or they don't have a way to, hire new workers now, and we're telling them they have to. So we need to make sure that our builder community is as apprised or up to date on this information as you are. But we're starting with you, because you're the ones who are going to be directly contracting and working with these folks, and have to be really clear about what you're saying when you're asking for things.
Right. So we do have two questions regarding Section 3. If you're not able to find any workers or businesses, and the contractor's not hiring anyone, we are going to be covering those topics shortly. So I'm going to go ahead and pause on answering those for now. I do want
to say, Catherine, that I keep hearing this, and we're not hiring any, and that's not the point. That's missing the point. There are many general contractors who have labor or subcontractors that have laborers, journeymen folks that are doing site cleanup, folks that are driving trucks, what have you, that qualify already as Section 3 workers. They just don't know it because they don't know anything about doing income certification for a Section 3 worker, which we will get into for you. But the reality is there's probably laborers on these projects that already count as Section 3. And what the developer and contractor community is not catching up to is that they now have to work with you to income certify or verify their whole worker crew and see who could qualify towards Section 3 labor hours. It's not a matter of hiring and firing.
Right. Oh,
Guys, I recommend that we get through this section and we answer questions at the end of this section because we are getting to some of the stuff.
We're losing time. Appreciate it.
Yeah.
But these are important things because they keep coming up. So we wanted to make sure we emphasize them, but we'll move through.
Absolutely.
Okay, and so on that note, we can move on to the next slide. So a couple of other considerations. So for projects that are estimated to be anywhere near that $200,000 threshold, you want to make sure that the contractor is procured with the upfront understanding that Section 3 numeric goals will apply if the project involves over 200,000 in HUD funds. So an example is, if you're doing an independent estimate before you go out to bid and you're estimating that the total project cost is going to be 190,000, then you should go ahead and put in your bid solicitation some language saying, hey, just everyone know that, we think Section 3 is going to apply to this project, or, at least saying, note, if the project is over 200,000 in HUD funds, Section 3 will apply. Again, just so that any bidders can incorporate that information into putting together their bid. Also, you do have the option to give award preference to Section 3 businesses when you're evaluating return bids. So you could have a policy in your department that says that if we're looking at return bids and say the lowest bidder is not a Section 3 firm, but the next lowest bidder is a Section 3 firm and their bid is within a certain percentage of the lowest bid, then we're going to go ahead and award to the Section 3 business. So that is something that you have the option to do. That's considered a qualitative effort that will help you achieve safe harbor for Section 3, so that even if you don't meet the numeric benchmarks, you're still documenting best efforts.
Yeah, but to the earlier question's point, if it's a state requirement that you don't use that as a preference, that you have to use low bid, it does not mean that there's a conflict here. It's just a recommendation that you can do that to track best effort. So I want to clarify that.
Well, I'd like to clarify that the state actually for federal for subrecipients does push down Part 200. So that's not a California requirement, that's a federal requirement, but it can be obviously, as Grant said, there are exceptions to when Section 3 is involved.
Right. So contractors are not required to hire new workers or subcontract out just for the sake of meeting those Section 3 numeric benchmarks. So if they do have the capacity to complete the project in-house using their existing workers, then they don't have to make extra efforts to hire or subcontract if they don't need to. However, they do still need to track and report on those numeric benchmarks. So they need to submit data about the total number of hours on the project, and they need to document which of their workers are Section 3 and targeted Section 3 workers. They still need to do the tracking and reporting. So this speaks to a couple of the earlier questions. So Section 3 will only apply on a per project basis now, rather than per contracted program activity. And the definition from the regs that's cited there is the project is defined as the site or sites together with any buildings and improvements located on the sites that are under common ownership, management, and financing. So that's how you would determine, applying that 200,000 to a project. So for individual projects that are under 200,000, you still have the option to encourage Section 3, but it's not going to be required.
And to clarify, under 200,000 in HUD subsidy.
Yeah, sorry, that is exactly right. So
the project could be $1 million. If you put 200,000 or more in, then that will trigger Section 3.
Right. Okay, next slide. So we're going to have a quick checkpoint. Do we think we have time for the checkpoints, Grant?
Let's run through them quickly because we did spend a lot of time responding to some very good questions, and we do want to finish on time. So let's go through them quickly. I don't think we'll have time to review responses on the Q&A right away.
Okay. So yeah, what types of activities does Section 3 apply to? So I think we can bring up the answer. What?
If you hit advance, yeah, there you go.
So as we said, it's new construction, rehab, or demolition of housing, infrastructure, or public facilities. So I think of it as physical projects would be Section 3 applicable. And the next question, what is the dollar threshold for a project to trigger Section 3? And you can go ahead and bring up the answer there. So if it exceeds 200,000 in CPD funds, and just to clarify, CPD stands for Community Planning and Development Funds. That does include CDBG, home, CDBG, disaster recovery, and mitigation funds. So the threshold for those is 200,000, or if it's lead and healthy homes funds, then it's 100,000. Next question. What was the major change to the type of data and reporting requirements for Section 3? So it used to be that you would track new hires and construction and non-construction costs. Now you're only tracking hours worked. So Section 3 now requires tracking and reporting of Section 3 labor hours for workers and targeted Section 3 workers.
And we'll get into what that means shortly.
Do professional services need to meet Section 3? And the answer is no, but you do have the option to encourage or require that as part of your best efforts. Next slide. So we keep talking about Section 3 businesses, Section 3 workers. So what do we mean when we're talking about a Section 3 business concern? Well, it's any business that meets at least one of three criteria, then it has to be documented within the past 6 months. And those three criteria are at least 51% owned and controlled by low or very low income people, or 75% of the labor hours performed for the business over the past 3 months were performed by Section 3 workers, which we'll look at in a minute, or a business is at least 51% owned and controlled by current public housing residents or residents who currently live in Section 8 assisted housing. So any one of those criteria would have to be documented from within the past 6 months. And just to clarify that the 6 months goes back starting with the date the contract is executed and goes backward 6 months into the past, or at any later point while the project is underway. So if if it's for a subcontractor that gets added later in the project, then it would just be at whatever 6 months going back from whatever date they were added to the project. Next slide. So if there's no numeric benchmarks for Section 3 businesses, then why should you bother with certifying them? Well, there are a couple of good reasons why you should still try to certify and track contracts awarded to Section 3 businesses. For one thing, it is still in the regulations that HCD and its UGLUGs and subrecipients do have to make best efforts to contract with businesses that direct economic opportunities to Section 3 workers. So it is part of helping Section 3 workers. Also, sometimes it's necessary to certify Section 3 businesses in order to document that the workers are Section 3. The big one is that if you are contracting with a certified Section 3 business, 100% of the hours worked by that business can automatically be counted as Section 3 and targeted Section 3 hours. So if you document that the business is a Section 3 business, you've automatically met your Section 3 numericals with that business. And then also that it helps HCD and subrecipients meet best efforts towards safe harbor if you can't achieve the numericals. So it is part of best efforts, and that would apply to more like pre-certifying, making efforts to do outreach to potentially Section 3 businesses and certifying them, and kind of having a list of potential Section 3 businesses that then you could reach out to for specific projects. And we will get
What
into
a safe, yeah, we'll talk about safe harbor, but just as a side note, that what we're talking about is some of your projects may not achieve the goals that you set out to achieve, but if you have documented for HUD and monitoring purposes that you've made these extra efforts, then you get credit towards making best efforts towards meeting the Section 3 goals, even though you may not do it. So it's not that there's a big recapture problem here as much as you need to really document where and how you're trying to meet Section 3, so that if you don't, because not everything will, then you can at least get some what we call safe harbor in the program from HUD. And we'll talk about that a little bit later. But the real key here is what's in purple, which is that if you have a business that happens to meet the definition of a Section 3 business, you get a bonus, which is that all of the time and effort by that business on your job, that professional service, will count towards your Section 3 numeric goals.
Great, thank you. Next slide. So when thinking about Section 3 certification for businesses, the regs do say that UGLUGs and subrecipients can establish their own system for how to certify Section 3 businesses. That includes when and how self-certification is going to be used. So those qualifying criteria are still the same. So this is more talking about just your internal policies and procedures for how to certify them. We don't recommend self-certification for the businesses, even though it is technically permitted, because again, it's a question of responsibility, and HUD is not going to go after the business specifically if there's a fraudulent situation. They're going to first look at the grantee. So if a business does claim Section 3 status, you want to certify them at the start of the project, or as soon as they enter the project, if it's after that project start date. So you do want to do the certification as soon as possible. And then the business retains Section 3 status as long as the project is going on, so long as they continue to meet the definition of a Section 3 business. Now that's what the regulation says, but it doesn't say anything about how often you should check that they still meet the definition of a Section 3 business. So that is something that either the state or the UGLUG or subrecipient would set a policy as to how often you're going to recheck that. So it's often maybe like 1 to 3 years is rather standard, but again, that's not, the regs are silent on that point. Next section, slide, sorry. So now we're going to take a look at Section 3 workers. So what does that mean? As we noted, there are now 2 categories of Section 3 workers. There's regular Section 3 workers and there's targeted Section 3 workers. So as we said, 25% of the total hours worked on a project have to be by Section 3 workers, and then 5% of the total hours on the project have to be by targeted Section 3 workers. The 5% is within the 25%, they overlap. So it's not a total of 30%, it's a total of 25%. Also just note that that's 5% of the total hours, which isn't the same as saying 5% of that 25%. That would mathematically that would give you a different answer. So it is, 5% of the total hours and 25% of the total hours. So what is a Section 3 worker? Here we're talking about regular Section 3 workers. So the regulations say it's any part-time or full-time employee who meets one of the following categories as documented within the past 5 years or at the time of the project. And so they just have to meet one of these criteria, either their income for the previous or annualized calendar year is below 80% of the area median income. And do note that that should be calculated for the area where the worker lives, not necessarily where the project is located. The regs do say that you can use the income for a single person household. So you don't have to collect information on every member of their household. You're just looking at that worker's wages and comparing it to the income limits for a single person household. So that's one way that you can document.
That's huge. So that's really big because that simplifies how you verify the income as qualified income. So we don't need to get a whole housing counseling agent to meet with each of the workers and do a full household income certification. We can simply go off of what the employer reports as their salary and then see how that salary compares to the single household area median income of 80% or below for that region.
Right. Thank you.
So that really makes it administratively less burdensome.
Yeah, for sure. That streamlines it. So that is one way that you could qualify a Section 3 worker. Another way is if the worker works for a Section 3 business that has been verified as a Section 3 business, then that worker can automatically qualify as a Section 3 worker. So that is one reason why you might want to certify a business as Section 3 instead of individually certifying all of their workers. The other way is if the worker is a youth build participant. And the fourth way, which is not explicit, but it is implied in the regs, is that if a worker is a targeted Section 3 worker, then by definition, they are a regular Section 3 worker as well. It does say that the documentation has to be dated within 5 years. So that is going back a little bit further than the requirement for a business. So that is 5 years within of the project start date or the date the worker's hired, whichever is later.
And just because I don't think we've defined it for folks yet, anybody not familiar with Youth Build? Youth Build is a national nonprofit workforce development training program. And so it's a little misleading. It's if they're a graduate of a youth build program or they're in a youth build program and your contractors or subcontractors choose to hire them as new employees or as part-time employees, that those hours that they work on the job will count. And so that's another bonus that you can get getting your contractors to recruit or use folks out of youth build programs if you have them in your region.
Absolutely. And I think we do have a slide with some links to specific youth build chapters. So we'll look at that in just a couple of minutes. Next slide. So now what is a targeted Section 3 worker? As we noted, it is a subset of regular Section 3 workers, and you do have to track both Section 3 and targeted Section 3 workers, or contractors do rather, to meet those goals. So a targeted Section 3 worker has its own qualifying criteria, a couple of which are the same as a regular Section 3 worker. So it's a worker who is either employed by a Section 3 business, so again, that's the same as a regular worker, or within the past 5 years, you can document that they're living within the service area or neighborhood of the project, which does have a specific definition that we'll look at in a moment, or is or was a youth build participant within the past 5 years. So you'll see that 2 of those 3 criteria are the same as a regular Section 3 worker. The one that's different is that they live within the service area or neighborhood of the project. And that is because the regulations say that you need to prioritize youth build and workers who live in the neighborhood of the project. And I do see that the questions are piling up here. I apologize, but just in the interest of time, we're going to try to get through the material first, and then at the end we can, if we haven't addressed your question, we can spend a couple minutes, going through the questions. You guys are super engaged, and that's awesome. We really appreciate it. Did you have anything to add, Grant?
Nope, I think we just keep going so we can get to these questions at the end. So let's do that.
So the Section 3 service area, again, that does have its own definition in the regs. It means an area that's within 1 mile of the project site, or if fewer than 5,000 people live within 1 mile of the project site, then the regs say that it would be within a circle centered on the project site that is big enough to encompass a population of 5,000 people, according to the most recent census. So that would be a circle that you could expand until you have enough that you've got 5,000 people. As a reminder, that is one of the criteria for being a Section 3 targeted worker, is living within the service area. And just a quick note that a Section 3 service area is not the same as a low mod service area. Even though the language is the same, low mod service area is related to meeting a national objective. So just don't be confused. Next slide. So in order to map that service area, we do recommend working with your local GIS or planning department, if you have one, to figure out the correct radius of that circle if it's greater than 1 mile. Unfortunately, there isn't a free planning and mapping tool out there, as far as we know, but
they're working on one.
Yes, they are working on one. But in the meantime, there isn't anything that we've been able to find. But that might be something that you could try to contact the state, and they might be able to help with. Sorry to put you on the hook, Sue. But there's just not a lot of great guidance about that right now. But then as far as documenting the worker's residence and its distance to the project site, you can use Google Earth, and you can map the straight line distance, which is like as the crow flies, from their house to the project site. And then just any printouts of any documents, you would put those in the project file. Next slide. So certifying Section 3 and targeted Section 3 workers. Once again, the regs do say that UGLUGs and subrecipients can establish their own system for certification. The criteria need to be, the same as the regs, but when and how you use self-certification. Self-certification, it's best to use it as a last resort, but have a policy saying when you're going to use self-certification. And then for targeted Section 3 workers, documenting either that their employer has confirmed that they live within within that Section 3 service area, or their employer's confirmation that they are employed by them and that they're a Section 3 business, or you can accept their self-certification of youth build participation. If you did have workers who were certified under the old regs, then they would need to be recertified under the new regs, which is Part 75. And then, as we mentioned before, a worker's hours can be counted for up to 5 years after you certify them. You can continue to count them as a Section 3 and or targeted Section 3 worker. That 5 years would either start at the time they're hired or at the time you certify them. Next slide. So we did mention that youth build participation is one of the qualifying criteria for Section 3 and a targeted Section 3 worker. So just to clarify, youth build, it is a national nonprofit organization. They provide community-based pre-apprenticeship programs to at-risk youth who have dropped out of high school. They are funded by the U.S. Department of Labor, and they teach vocational skills and construction.
Sorry, Catherine, we're
Yeah, we lost you, Catherine.
yeah, unable to hear you.
Yeah, you were fading in and out there.
Can you hear me now?
Yep.
Oh, I don't know what happened. Sorry about that. So yeah, so they are funded by the U.S. Department of Labor, and they provide vocational skills in construction as well as some other industries to at-risk youth who have dropped out of high school. So they serve their own community by through construction or rehab of housing in their own neighborhoods. Next slide. So a couple of links to some specific youth build chapters that can provide you information on specific programs. So this is if one of these is located in your area, that might be a good potential partner to reach out to. Next. So this is just a summary slide, again, going over the difference between the Section 3 versus the targeted Section 3 worker. So we're not going to cover it again, it's just for your reference. So a couple of additional considerations. Once again, contractors don't have to subcontract or hire new workers if they would have the capacity to complete the project in-house, but they do still have to do the tracking and reporting and make best efforts as the opportunities arise. Also, the regulations do say that qualifications are still the most important thing. So if a worker is unqualified for the position, they don't have to hire them just because they're Section 3. And by the same token, if a business is not qualified to perform on the contract, you don't have to give them the award just because they're a Section 3 business. So you do still need to make sure that they're capable of performing in that role. Next slide. So the checkpoint, we'll go through real quick. So what is the benefit of certifying a Section 3 business? It counts towards meeting the numeric benchmarks, and if it's a Section 3 business, again, 100% of their workers' hours count as Section 3 hours.
So one note there that we haven't raised, but I can see coming up. If you've hired a contractor and the way that they bill on a professional service that let's say qualifies as a Section 3 business, and you're under a contract that just bills at unit-based pricing or some other method of pricing, your invoicing may not give you their labor hours. So one of the things that you're going to have a discussion about if you're going to qualify a Section 3 business is that they're going to need to give you a sheet that reports on how many hours their entire team worked on your project. And that can be monthly or quarterly, but you are going to need some extra level of administrative reporting. So if you are looking for that in your procurement, this is why it's important for them to know what this means.
Great, good point, thank you. So the two types of Section 3 workers, regular Section 3 and targeted. Determining the Section 3 service area, you would need to determine that mainly only if you're trying to qualify someone as a Section 3 targeted worker, and that's the criteria that you're trying to qualify them under. And
so you're going to have to do what the target is for the area and then see if any of the laborers live within that zone.
Right.
And that's how you arrive at your targeted workers. So you're going to have to do that for each project. So the easiest way to do it is to talk to your contractor and say, can you check all of your workers who are going to work on this job and see if their home address is anywhere within a mile of the site? And if so, then you'll collect a Google map that shows some kind of a straight line on it, and then you've documented it for your file. And we'll get into more of those nuts and bolts on this second chapter.
Great, thank you. Next. So the numeric goals, once again, it's 25% of the total hours are to be performed by Section 3 workers and 5% performed by targeted Section 3. This diagram is just to help illustrate that the targeted 5% does overlap with the 25% for regular Section 3. Next. So that does include hours worked on a project by developers, contractors, and subcontractors. If you are not achieving those numeric goals, then you do have to document what HUD calls qualitative efforts towards meeting the numeric goals. And we will look at that more shortly. Again, there's no longer a numeric goal for the 10% of construction costs and 3% of non-construction costs. You're not tracking that anymore. But you do still need to make best efforts to contract with Section 3 businesses. And then keep checking the Federal Register notice, because HUD, every 5 years, they are possibly going to update the numeric benchmarks. Next slide. So just to talk about safe harbor for a moment, that is a term that is partly related to compliance, but it's not quite as black and white. So for sure, if you meet the numeric goals of 25 and 5, HUD will consider you in compliance with Section 3. However, if you're not meeting the numeric goals, you can achieve safe harbor by making qualitative efforts towards meeting the goals. And that would include outreach, training opportunities. There are several options that you can use. We will look at some specific examples tomorrow. So basically, if you don't meet the numeric goals, HUD will take a look at your qualitative efforts, and then they will determine if you've met the safe harbor provision. Next slide. So for reporting, HCD reports its Section 3 compliance to HUD. So for their annual HUD funding, they report in that IDIS database, and for disaster recovery and mitigation funding, they report in the DRGR database. UGLUGs and subrecipients of HCD, you all report your Section 3 compliance to HCD through the grants network system. And your contract manager will provide further guidance on the specific requirements and how to access that system. HUD and HCD then can track HCD's progress towards meeting numeric goals through a report in those databases called MicroStrategy. And then, as we mentioned, there used to be a specific system for reporting it called the Spheres, and it is no longer in existence. So looking at the responsibilities for implementing Section 3, the type of project where HCD is a pass-through entity, HCD is responsible for providing a Section 3 plan template and guidance to the UGLUGs and subrecipients, also for monitoring UGLUGs and subrecipients for their compliance with Section 3, and then reporting that compliance to HUD. And then UGLUGs and subrecipients, you take the guidance that HCD provides and you would refine it according to any of your local circumstances, and then you would implement Section 3. You would be then watching your contractors and developers to make sure that they're making their best efforts to comply with Section 3, and then you're going to report compliance to HCD. And then your developers and general contractors and subcontractors are the ones that are actually going to be making those best efforts on projects to meet the numeric benchmarks. They're responsible for documenting their efforts and submitting reports to the UGLUG and subrecipient. So basically the monitoring flows downward from HCD to UGLUGs and subrecipients to contractors, and then the reporting goes upward from contractors to UGLUGs and subrecipients to HCD to HUD. If it's a program where HCD is managing the program directly, then it would go from HCD through the construction manager, who would take that guidance and implement Section 3 And then they would pass it down to their prime contractor and subcontractors. But again, the monitoring flows downward and the reporting would flow upward, similar to the previous model.
We apologize. I don't know why Zoom's cutting the very bottom line off the PowerPoint slide. So you will have a recorded version and a copy of it that includes that information we're reading to you.
Grant, can you see the closed captioning?
No.
No.
Sorry?
No.
Oh, that might be why. Let's try this. Okay, let's try that. Keep going. Next slide.
Yes. So MWBE certification versus Section 3. So MWBE is Minority and Women's Business Enterprises. That is not the same as Section 3. Section 3 preferences are based on income and location. So Section 3 is race and gender neutral. In some cases, it may overlap with MBE certification in the sense that a contractor may be able to qualify for both, but they are not the same and they're not interchangeable as far as documenting Section 3 compliance on a project. If you have MWBE policies for certification and project targets, then it's always good to align those with your Section 3 just to streamline your efforts. But again, it's just not the same thing, so just don't be confused. Some additional considerations. So Section 3 does not apply to material supply contracts or contracts that don't require any labor. Section 3 does apply to demolition, even though it is not explicitly stated in the regulations. The Section 3 status of a worker, targeted worker, or business owner cannot be negatively affected by a prior arrest or conviction record. And then once again, you are required to make best efforts to contract with businesses that are employing Section 3 workers, either from the metropolitan area or the non-metropolitan county where the project is located. So there is that emphasis on prioritizing workers that live close to the project. So checkpoint. So the two new benchmarks are 25% and 5% of workers of the total hours on a project. I think we covered that. The two ways to achieve safe harbor are either to meet the numeric benchmarks or perform qualitative efforts. Does Section 3 apply to demolition? Yes. I think that's all. So now we're going to walk through considerations for designing your Section 3 program. Looks like we still have a little time, but I am going to try to go quickly. So when we're talking about designing your Section 3 program, we're really talking about a higher level program where you're establishing partnerships and developing policies and procedures before you need them for a specific project. So by building a Section 3 program plan, it then will help you to meet the numeric benchmark on specific projects. So the first thing that you want to do is designate a Section 3 coordinator from among your staff. This is going to be the person that's going to be the single point of contact. They're going to be the person who searches for updates of the policy from HUD or the state. They maintain the resource inventory. They're the source for technical assistance or questions. And then they would also lead the training of other staff or contractors, and they would be the connection if a contractor is struggling to meet Section 3 requirements. They shouldn't be a unilateral person who develops the Section 3 plan all on their own, though. Your agency's policy team should still review the plan before it's adopted.
Who's the HCD point of contact? Do we have a single point yet for Section 3 when the subrecipients are working with you?
Not yet. Generally, the subrecipient should talk with their contract manager right now, and then we will hire somebody to work internally with HCD, but I think we'll still have the point of contact for the local jurisdictions be their contract manager. For CDBGDR, currently it's me.
Got it. Thank you.
Okay. things. So step 2 is to become familiar with the actual requirements of section 3 that we're going over today. So that you'd want to include part 75, which is the regulation, the Federal Register notice, and any other material that HUD puts out that details the compliance requirements. We did show you the resources slide, and it is at the end of this presentation as well. Step 3, we could move on. So then you want to kind of put together a resource inventory. So identifying potential partners that could work with your agency to help you meet your section 3 goals on specific projects. And so that you can build on existing resources rather than reinventing the wheel. So it looks like there's a pop-up that's coming up. Thanks. So this might include employment, job training agencies, local, regional, and state partnerships. It could be youth build, public housing, and other HUD-assisted housing is a good source of potential section 3 businesses and workers. And then local businesses, so your contractor community and other vendors are also important partners in building your section 3 program, just making sure that they're in the loop and can help you comply with the requirements. Next slide. So these are just some sample data points that you might want to capture as you're building your resource inventory. So, you know, having just a spreadsheet and having a list of contacts and kind of what they can offer you is a good idea for the section 3 coordinator to do. Next. Workforce development, they can be a great partner if you have a workforce development agency. You know, if they go to events and job fairs, you may be able to piggyback on those and give a section 3 presentation. Developing brochures about section 3, which their workforce specialists can then give out to clients that they're working with, is a great outreach method. And then just regularly getting together with any workforce specialists and making sure that they understand section 3 as they're then going to be communicating it to clients are some suggestions. And these are all qualitative efforts then that you can document that you made for Safe Harbor. Next up. So if you do have any other numeric benchmarks for either working with workforce or procurement or employment goals, you would want to review those and just track and make sure that you're able to meet all of the benchmarks that you need to. Just note that the federal regulations do say that you can't have geographic preferences in procurement, but if there is a case where applicable federal statutes mandate or encourage geographic preference, so that's where section 3 comes in as far as focusing on proximity to the project site. So you are okay, there's not a conflict in the regs as far as that goes. You can set a policy that's more restrictive, you just can't be less restrictive when it comes to section 3. Next. So when you're developing a section 3 plan, you know, again, just aligning your policies and procedures. If you do have the option to integrate Davis-Bacon data collection as well as MWDBE certification. If you're using that, you could, you know, develop a system to be tracking all of those goals together. Next.
I would just state on that, Catherine, that if you're doing, you know, you have MWBE certification is a whole other process, but if you're underwriting a business for what they qualify to help you meet regulatory needs, that's where I think the alignment with section 3 businesses. So if you're underwriting a business to be section 3, you might include some data collection for whether or not they also qualify as an MWBE. And the inverse is true too. So there is a little bit of alignment as it relates to just business underwriting, but when it comes to the tracking and reporting of what you've achieved, that's where it starts to separate, because then you're really looking at labor hours of laborers with contractors, whereas with MWBE, I think you're really just tracking what percentage of a contract that contractor is getting.
Thank you. So once you've done all of those other steps, then you're ready to actually prepare your Section 3 program plan. The Section 3 plan is a blueprint to guide how you're going to apply your policies and procedures to meet your Section 3 goals. It should be written in a clear, simple narrative so that anyone can follow it. You do want to make sure that you're updating it regularly. So we suggest like every 6 months, just check and make sure if it needs to be updated. You should name it with a versioning system just so that everyone knows which is the most recent update. And then this is also a good time to keep track of when to check those Federal Register notices to see if any of the benchmarks have been updated. Hopefully you'd be notified through the email list, but just in case, it's good to check the Federal Register as well. Your plan would also include any forms, checklists, templates, or other tools to help your partners more easily comply with Section 3 and understand even just what you need from them. And then the plan also is something that you can distribute to your developers, your contractors, letting them know what the goals are and the criteria for Section 3 compliance.
And let me just say here too that this is another area that we've mentioned before where what we've seen is that the Section 3 plan requirements are passed from either a state or a subrecipient to a developer or a builder, and that's not really how it works. So while you're citing and referencing the requirements of Section 3 in your contracts and agreements, the state has given all of you a Section 3 kind of blueprint or outline to use and then work with in each of your specific communities. But you all as the grantees or sub-grantees are the ones responsible for setting those goalposts, not the contractors and developers. So what you should be doing is supplying them with a copy of the plan, and then what they should be doing is supplying you based on the plan and any of your forms or tools of how they are implementing it and achieving it or making best efforts to do so.
That's a great point. Yeah, thank you. Next slide. So what should your Section 3 plan consist of? Well, first, it should consist of your policies and procedures for how you're going to implement Section 3 and what the standards are going to be. Then it should also include methods for how you're going to cultivate participation. And again, this is pertaining to before you actually need it on a project. So it would be anything to do with if you're trying to pre-certify a list of businesses, coordinating with Youth Build, any unions, workforce development agencies, contractor training. There might also be other ways to cultivate participation. You definitely want to keep a log of all of your outreach and qualitative efforts so that, any time that you don't meet the numeric benchmarks on a project, you have this log of efforts that your program has made at a higher level that you can show that you're trying. A sample of the Section 3 procurement clause and contract clause, just so that those are handy right where you need them. And then all of your forms, so certification, acknowledgement forms, things like that are really important.
And what this is really just a simple begin with the end in mind, right? It's thinking about if you were to be monitored, when you will be monitored by HUD and the state for how you have attempted to meet Section 3 goals. This is a very clear outline backing into what the monitoring is going to look at and ask of what you could have in a binder so that you're tracking and able to report on it, and you don't have concerns or findings related to lack of information or documentation of how you are or are not achieving Section 3.
Right, thank you. Next. Some other helpful things to include in your plan related to service areas. So a service area map for your general area for business pre-certification, your policy for how you would establish the project service area based on the 1 mile or the 5,000 people. Any sample social media graphics, outreach flyers, kind of the master copy that you could provide or update for a specific project. How you're going to verify income, so just the procedures for that, and links to any Section 3 databases, resources where contractors could go to look for potential Section 3 workers. We will talk more about the Section 3 portal, I think tomorrow, but that's a great resource too. Sample business and worker applications for how to qualify them as Section 3, and then a Section 3 project file checklist that can be pulled out and applied to specific files, as Grant said, to make sure that you're in good shape for a monitoring visit.
And that's getting to the core of the issue here, which is how are you going to coordinate with your builder community and your contractor community so that they have an easy way to give for you the labor hours tracked so that you can report them into these systems with HUD and get credit where credit's due.
Exactly. Next. So step 6, once you've got your program plan, you're going to want to develop forms for how to document compliance on specific projects. I believe that HCD has actually developed forms, so they should be able to provide those to you. We are going to walk through these in great detail tomorrow, so I'm not going to spend a lot of time going through them right now. This is a list of the types of forms that you are going to want to have to use for projects. But again, we'll look at those in more detail tomorrow for the sake of time. Next. And then when you're using those forms that you develop, you're going to want to include them in your bid package, make them an exhibit to the contract, and then require supporting documentation if a contractor is claiming that they are a Section 3 business, for example. You would want to either certify them yourself or require them to provide documentation. We do recommend requiring subcontractor information forms and employee lists, both at the beginning and end of the project, just to make sure you're capturing any updates that might be happening. And then you can also use the, modify the forms with, working with the state as appropriate, if you're going to use them to capture MWBE data for your annual HUD reporting form. Although I'm not sure if maybe the state does that in the state CDBG program. So that might not be relevant to some of you, but you can check with your contract manager about that. So regulatory references, Section 3 is found in several different regulations. The most important one is going to be that Part 75, which is the new rule. And then we have the Federal Register notices listed for you as well, where you can find the final rule. And then if you want to go to the next slide, this is our same resource list that we looked at. It should be the same stuff that we looked at the beginning of today. And I think that's our presentation for today. We did conclude with about 15 minutes. So I'm going to go
20 questions.
Yeah, 15 minutes, 20 questions. So I'm going to go into those now, and we'll try to go through your questions, and we can stay a little bit after to answer questions if you all have the time. So
you want me to take the first one?
Sure, that'd be great.
So there's one example that's been provided, thank you, Paul, about how a public facility project is hypothetically a $250,000 construction and rehab project, and a portion of that project is going to require some lead abatement, and that lead abatement is only $25,000. So the lead abatement contract is under a separate contract, and because of the nature of the work, does it still trigger Section 3? I'm going to say yes, that lead abatement and any environmental remediation as part of the project or the construction of the project is part of what triggers Section 3. However, in the example, I'm I'm going to take the presumptive approach that when you say the facility project is 250,000, that you mean it's 250,000 in some HUD funding source that will trigger Section 3, such as CDBG-DR. If it's just that the project's 250,000, but the only HUD subsidy in the project is 25, you have not triggered Section 3. So kind of two points to make in the one question. Hopefully that clarifies those.
Thank you. So a bit off topic, but can you use the same qualitative evaluations to meet MBE and WBE benchmarks in procurement? I'm not exactly sure what the question is getting at. We did discuss a little bit that MWBE are different than Section 3. The qualitative evaluations, I would say that they are different. Yeah, so you would be developing your own process for documenting and meeting Section, M and WBE goals.
Yeah.
for
But the certification for becoming an MWBE is different than if you are qualifying them as a Section 3 business concern. So there may be some similar data points that you use, and that's where there's an efficiency administratively. But to meet those are two totally different federal regulatory requirements. And so you are going to underwrite them and qualify businesses in a different manner for the two needs. So if they qualify as Section 3, they do not automatically qualify as MWBE, vice versa.
Right. Next question, follow-up question on certifications of entire worker crew. Is the certification based on the wages that the individual workers are making on the specific project? Or say the worker is an EE of a subcontractor that is only on site for 1 month. What wages are you using for this certification? What they're being paid by the subcontractor for that particular project, or what that worker is making on average on, say, for example, their W-2 for the prior year. So it would be actually based on their annual income, not what they're making on a specific project. So it would either be based on their income for the prior year, or you could annualize their projected income for the upcoming year. But it's not just going to be project specific, unlike Davis-Bacon. Hopefully that answers your question. What happens if a Section 3 business is procured for public works, but at time of contract, they are no longer Section 3 because the 6 months has expired and the income has changed? So if you get them, you document that they are Section 3 business at the time that you procure them, and then 6 months goes by and their income has changed. So you're going to want to certify them at the time that the contract is executed. So if their income has changed, then, but actually so you might want to see if you can certify them by some other method. But yeah, you do need to make sure that at the time a contract is executed, that you have documentation from within 6 months, saying that they met one of the qualifying criteria. Grant, I don't know if you have anything.
Yeah, as a side note though, I mean, part of it is timing, right? So it's going to be your policy for when you qualify them as Section 3. If you're doing that preliminarily in your procurement, but you haven't gathered all the data, you haven't fully verified it. So to Catherine's point, it really is a time of contracting. And let's say that they got the procurement because they had Section 3 and you included that as extra criteria, well, then you may have to go back and reassess. But the real point here is that even if they were going to qualify as Section 3, and now because of timing, things have changed, and by the time the project starts, they are no longer a Section 3 business, you won't be able to qualify all their hours, but this still counts as best efforts.
Exactly.
So I would still keep that documentation to achieve safe harbor.
Right.
Sorry guys, one clarifying question where that's concerned. The way I read that question was if you've you've contracted, you procured and contracted with a Section 3 business, do you have to and let's say your contract is for 3 years, do you have to recertify them as a Section 3 business within that 3 years? My understanding is that you would not, right? So
No.
if you are, so the Section 3 gets certified at the beginning of a contract, but you don't have to recertify them during the life of that contract. That would sort of, that would be far too burdensome. Hopefully that answers the question.
I agree. Yeah. The next question, is there updated Section 3 language that jurisdictions can include in the bidding manuals and contracts? The answer to that is yes. Tomorrow we will take a look at some specific language. Also, I don't want to speak for Sue, but Sue, maybe they could contact their contract manager to get copies of anything that the state can provide.
Yes, we have. So the DR program has got updated stuff, and we are sharing that with the annual program staff. So the annual program staff will determine what the annual program subgrantees should and can use. But yes, we are working internally to pull this together so that we've got updated documents for everybody. We'll keep you posted on that.
Thank you.
Yeah, and I would just say to that question too, I think what Section 3 is allowing is for you to use the single person household. There's nothing that prevents you from doing actual underwriting for income. So you could go the extra mile and say, while we could take the easy way of just qualifying them based on their salary and a single person household, we're going to actually look at the size of the household and do household income.
And it looks like you're addressing that next question there.
Right.
Okay. Yes. Thank you. Will there be a training like this available that we can suggest our distribution list contractors participate in? Sue, do you want to answer that one?
So we did a training for contractors a while ago. We, as you know, probably California the state has to remediate everything so that we can get it posted online. And that one hasn't been, we weren't able to get it completely remediated. So the slides are up, but it's not a webinar. So I would recommend that this one will be posted as a webinar. Therefore, I'd recommend when we get this posted that your distribution list check out this presentation.
Yeah, and everything here, for the grantee's perspective is equally relevant to the contractors. They may have some different questions, but if they take the time to understand this from the grantee's perspective, they should also understand what it means logistically for them.
Right, they should be in pretty good shape. If the employee is a youth build participant, but their income level exceeds the state income limits, are they still considered Section 3? So the answer to that would be yes. Youth build is one way to qualify someone as Section 3, but checking their income is another way. So you wouldn't need to do both. So if they are a youth build participant, you wouldn't need to go any further with qualifying them as Section 3.
Yeah, you just have to document their youth build participation.
Right. Will the Q&A be made available with the presentation as well? We are still recording, so it should be in the recording, but as far as a transcript or a list of the questions, I don't know the answer to that. Sue, is that something you can speak to?
Yeah, so that would be one of our goals, but it may not get done right at the same time the posting gets done, but that will be something that we'll look at, posting as some FAQs for Section 3.
Okay, and it looks like the next question, the person noted that we already answered it for them, so I'm going to go ahead and skip over that one. Does the targeted Section 3 worker need to meet the income limits to be considered Section 3 as well as the targeted definition? So again, you only need to qualify someone according to one of the criteria. So the income limits isn't actually a targeted Section 3 criteria. So if a person is below the 80% AMI, they could qualify as a regular Section 3 worker, but not a targeted Section 3 worker. If they're 80% or if they're below 80% AMI, but they're also a youth build participant or something, like then you could count them as a targeted Section 3 worker, but they only need to meet one of the criteria. So if you're using a different criteria than income, then you don't need to check their income. You can use one of the other criteria as a proxy.
Great question.
Yeah. Does the worker qualify if they were low income in the past year or past 5 years? So the documentation just needs to be data within the past 5 years. As a policy matter, I would recommend trying to get as recent of documentation as you can. So that would be something that you and the state could set a policy on. But just as far as what the regulation says, it says it has to be documented within the past 5 years. Section 3 service area mapping, HUD's CPD maps. I have not, so I hadn't been able to find a service area map as of the last time that we checked. It is possible that they might have come out with something recently. So we'll definitely check that and send out that link if it is something that is for mapping a service area. Yeah, thank you for pointing that out. We'll check into it.
But I would also look at the HUD website and the HUD exchange and just regularly check in. I think we did that just a month ago and they had not developed a tool yet. There used to be a tool, and I know that HUD was working with the vendor that had the tool posted online and to see whether or not they could make it available in a new way. But I have not heard that that has occurred yet.
Right. Does a targeted Section 3 worker have to live in the service area of the project and have income below 80%? So similar, I think we already answered this question, but no, they just have to meet one of the criteria. So actually they don't even have to live in the service area if, for example, they're a youth build participant or if they're employed by a Section 3 business. Then you don't have to go any further with checking their income. They only need to meet one of those criteria for targeted or regular, depending on what you're trying to certify them as.
So you can mix and match depending on where you need to hit a better percentage is basically what it comes down to.
Right. So if you hire a contractor who states they don't have the capacity to meet Section 3 hours, then would they need to hire? So if they don't, if you hire a contractor who says, I don't have any Section 3 workers working for me, so maybe they're a union contractor and they pay a wage that's well above the, the AMI, and they're saying that they don't need to subcontract on this project, they're going to do it all in-house, then they don't need to go outside of what capacity they have to hire or subcontract for Section 3. However, they do still need to fill out they do still need to track and document and submit the reporting. And then they need to be on the lookout for opportunities to make qualitative efforts too. So maybe they say at the beginning of the project, oh yeah, we're going to do this in-house. But then, it could be that 3 months into the project, they realize, oh gosh, we're going to be slammed. We're going to need to sub out some of this work. That at that point, then they would need to be making those efforts. So it's kind of just something that you would want to monitor as the, the project manager. To see and help them, identify opportunities for qualitative efforts.
But when they say that, that's an opportunity for clarification. So one, making sure that they understand what it means to meet Section 3 and the different ways in which they can. So are they saying that they don't want to, or that they're presuming that they aren't a Section 3 business? They know they're not a Section 3 business, so they're presuming they don't qualify and they don't know about the youth build and the subcontracting and the wage, the labor hour tracking. So it would be something that I would use as an opportunity to clarify that If it's what they're saying after you've gone through all of this information and material, then, you know, to Catherine's point, they don't have to. You're not, unless your policy is that you're only going to work with Section 3 businesses or something to that effect, which is more restrictive. And I'm not aware of anybody doing it that way. No, you can still work with them. You just have to, again, document how you made best efforts to qualify them and any other businesses around that project.
Right, and best efforts might look different on every project. So it's just kind of got to be an ongoing thing that you and the contractor are staying on top of for each project as it progresses. But yeah, I mean, that's a great point, Grant, that you might have a contractor who is only familiar with the old rule. And so, you know, they're saying that they can't meet it based on the old rule when in fact, maybe they can now, or, you know, so yeah, the communication is going to be really important.
Sue, we can keep going if you can. It's 1 minute past 2. We still have a few questions to answer. What would you like to do?
I'd like to keep going if that works for everybody else. And if folks have to leave, then we understand that. And at least that way we get all the questions answered and recorded.
Very good. We'll keep going.
All right. Can Section 3 compliance also be overseen by the labor compliance monitor? Yes, that's an individual decision. You know, the state HCD might have a recommendation for how they'd like you to proceed with that. And it depends on that person's capacity, of course, too. But as far as HUD and the regulations are concerned, there's no restrictions or requirements for that. It's going to be just whatever works, makes sense for your program.
But going back to that, to the question, I mean, it's ultimately, it's going to be your HUD representative that monitors. So just to clarify that, if that's what it was related to.
Yeah. So Sue, this next question is pertaining to the HCD website. So this might be one for you. So
that's again a question about the annual program contract management manual. So we'll need to circle up with the annual program folks at HCD and see where they are. I know that they're working on Section 3. I'm just not sure quite how far along they are. So check with your contract manager on that, and we'll try to get some information in the Q&A about where they are with all of that.
Thanks. Will HCD post a sample Section 3 procurement clause or Section 3 contract clause? Again, that's going to be up to HCD. We will be walking through some sample language tomorrow, but then yeah, to your earlier comments, Sue, that will be something that is in the works, I believe.
Yeah, everything from today and tomorrow in the presentation and forms that we're going to see will be posted on the CDBG DR website. And like I said, I'll check with the annual program to see how far along they are in working on their forms, or if they're just going to use our forms. So we'll have more information on that, but there will be specific guidance for the jurisdictions on all of this.
Awesome, thanks. You said earlier that the Section 3 worker is qualified as a single person if they exceed the low income limit as a single person household. Okay, I think we already answered this question.
Yeah,
so
the answer is yes.
Okay, annualized, that is a lot of work. Using the W-2 from prior year is the most efficient way of documenting. Is this acceptable? I would say yes.
Subject to HCD's policies.
Right.
But the Federal Register notice doesn't go into the details of that how.
Right.
It's what it's doing is it's giving you flexibility to just use single person household and verify income based on AMI. If you want to drill down on that and do it with some modifiers, that's between you and HCD.
So when you say annualize, Catherine, the way I hear that is what we did in CDBG, which was you take today's income and project it out 12 months. Is that what you mean when you say annualize?
Yes.
Yeah. So Lori, I don't think it's as difficult as if we're talking about the same thing in terms of getting a couple of current or most recent pay stubs and projecting it out 12 months, I think would be probably the one of the ways if you can't get last year's W-2, but I think either would be acceptable.
Yeah, and your policy can state which one you
Right.
you prioritize getting first, and then if you can't, then you go to the next method.
Exactly.
Right. Is there a list of what must be submitted at the time of bid for contractors to show their best efforts? So there is some information in the forms that we're going to go through tomorrow. So hopefully that should clarify that question, unless there's anything that you want to add right now, Sue.
No, we can further that conversation tomorrow.
I'll just say that your best efforts vary from location to location, project to project. So you may, it's not a one size fits all, but you should look at what state and subrecipients agreement is of minimum best effort attempt.
Thanks. So it looks like someone provided a link to a mapping application that can help determine a radius. Thank you very much for that. It's not a HUD link by the look of it. I'm not familiar with this particular app, but people are certainly encouraged to check that out, and it might be something that can help you. So thank you very much for putting that up. I'm curious to look at it. If a worker is in the radius, do they still need to be below 80%? No. So if they live within the service area of the project, you do not need to look at their income.
If you're using them for targeted worker credit.
Correct. Thanks. Yeah. Let's see. Trying to get caught up here. So a targeted worker can live within the area but not meet youth build or income. Correct. I'm not sure. It looks like the next couple of comments, I'm not really understanding them.
Looks like it's picking up on a conversation accidentally.
Yeah. When will the slide deck be posted?
As soon as we can get it remediated for ADA, which can take a week or so.
Okay.
And Sue, are you going to send out an email to the participant list letting them know when it's posted, maybe?
Absolutely. Absolutely.
Okay. Yeah, so this person's just noting annualized means something different in our world. Yeah, so you want to project, correct. Can targeted workers meet the 25%? So yes, the targeted workers are, a priority. So they can either meet the 5% or the 25%, because as we mentioned, the 5% is included within the 25% anyway. So if you have, if you had all 25, if you had 25% of the hours were targeted workers on a project, that would be even better, according to HUD. So the answer to that is yes. It looks like that is all of our questions. Oh, somebody did ask for that mapping link. They said they can't see anything in the Q&A. So I don't know, Sue, is that something that you're able to go back to, and maybe we can just read it to them really quick?
Yeah, I can find that. And then we had someone also raise their hand, so I'll unmute them so they can ask their question. Is that okay?
Yeah,
Sure.
we do have one more question too that just came through. Will tomorrow be a repeat of today? The answer is no. Tomorrow will be a continuation of today, where we're going to look at sample projects and how you would implement Section 3 on those specific projects. And yes, feel free to unmute.
Cecilia, go ahead.
Showing her is still muted on mine, Sue.
Oh, I've asked her to unmute herself.
I don't know if, unless you've changed the settings, they can.
I think they can unmute. Cecilia, can you type your question into the Q&A?
Looks like maybe she's unmuted now, or she just disappeared.
Maybe she just lowered her. Okay. Let me see this. Copy.
Did get another question, so maybe she typed it in.
Yeah,
No
she's saying,
option to unmute. Yeah.
Oh, okay.
This is a good question that just came through. Do we need to annualize the wage paid to the laborer from just the employer we are contracting with, or the wages from all their jobs, assuming that the laborer has multiple jobs throughout the year? My take on that would be that you would want to capture all of their jobs. I don't know, Grant or Sue, if you want to
I
give
guess
me.
we're getting into the term annualized and what that's really meaning to different folks. So not knowing the context of all of your lingo, I'm just saying you are going to take, yes, whatever they are making across jobs that they may know. If you're doing a projection of what their income for the current upcoming year is, you can benchmark it by what they already know they have contracts for, if they're just working gig to gig.
Well, or by the same token, if you are looking backwards at their income from the previous year, you would want to capture their income from this job and any other jobs that they may, if they were working multiple jobs, you would want to get a picture of their income for the previous year from all jobs. Again, the regs don't go into a lot of guidance as far as how to verify the income. So this is just our recommendations, unless the state has a different way that they'd like you to do it.
Not that I know of.
Okay.
And everybody can see on the screen that I posted the link that people were asking for.
Thank you, Sue.
All right. Well, I think that concludes our presentation for today. We will see you all tomorrow. And Catherine and Grant, can't thank you enough for a great presentation. And we look forward to seeing you all back here tomorrow at 9 a.m.
Thank you. I apologize I won't be on there, but you're in good hands with Catherine and the team.
Absolutely. All right, great.
Thank you, everyone. We'll see you
Thanks,
tomorrow.
everybody.
Well.
Bye.
Bye.